Hello everybody. Today we'll be solving a question from investment accounts. In this question, we'll be focusing on CumInterest and ExInterest. Okay, so let's start. First, let me explain you what is CumInterest and ExInterest. So CumInterest is the amount total purchase value which includes the value of interest, and ExInterest is the amount which does not include the value of interest. Okay, so let us solve a question. We'll solve a fairly difficult question, because solving a difficult question means that you get all the small questions together, and if you solve one difficult question you don't need to do the smaller ones, and it's really good because it includes all the difficult adjustments of CumInterest and ExInterest. Okay, so let's begin. So we'll be solving question number 3. A purchase on 1st September 24,000 5% Bharat debenture stocks at 9% or at 90 CumInterest, being payable on 31st March and 30th September each year. Okay, this means that on 1st March a purchase is made of 24,000. Okay, means on 1st March purchase of rupees 24,000. Alright, debenture rate equal to 5% and interest is payable on 31st March and 30th September. Okay, so now let's go ahead. Stamp and expenses on purchase amounted to rupees 20 and brokerage at 2% was charged. So here you might have a question that this brokerage 2% is on what value? Is it on the 90 rupees CumInterest, or it is the percentage of ExInterest? So in this question the brokerage will be assumed on CumInterest, because any specific data is not mentioned, so we always need to assume the previous value. Alright, so let's go ahead. Then interest for the half year was received on the due date. On 1st September, rupees 10,000 of the stock was sold at 92 ExInterest less brokerage at 2%, which means sell entry on 1st September rupees 10,000 was made, and and here on this we can see that the brokerage is 92 ExInterest less brokerage at 2%. Here we will assume that this 2% is on the value of 92 ExInterest. Okay, so in this question we need to adjust the brokerage value according to the question. See, here it is 2% of 90 CumInterest, and here it is 2% of 92 ExInterest. Alright, then let's move on. On 1st October, 8,000 stocks was purchased at 91 ExInterest plus brokerage at 2% and charged rupees 10. Okay, so we change on 1st October. There's a purchase entry on 1st October of rupees 8,000, and the brokerage is 91 ExInterest plus brokerage at 2% and additional charges, which is obviously stamp duty of rupees 10. Alright, further on 1st December 6,000 stocks were sold at 94 CumInterest less brokerage 2%. Okay, which means a selling entry on 1st December 6,000 and the brokerage is 94 cum-interest less brokerage 2%. The market price of the stock on 31st December was 88.5%. Show the investment for the year end on 31st December, making all the calculation in months. Alright, means the financial year is ending on 31st December. Alright, so this is really important. So now we'll make the investment account. Alright, I would request you all to see the entire video, because in this chapter there are very minute adjustments which are really important. So I don't just skip, because there is a very important question which will help you to do the understand ExInterest and CumInterest easily. Alright, so let's start with investment account. Alright, first we'll have the date and the particulars, then we'll have the face value and the investment and interest at the end. Alright, now same on the credit side, date, particulars, face value, investment and interest. Okay, so first initially we need to also form a calculation for investment cost, which will clarify how to calculate the CumInterest and ExInterest. So after making the investment account, here for clarification we can make the calculation of investment cost account. Alright, so let's make the investment calculation for investment cost account. Calculation for investment cost. Alright, first let's start with type. Type means either it's a purchase or it's a, like you have sold the debentures. Then let's make a date column. Then we can have a face value column. Here we can calculate the interest which has been accrued. Alright, then we can calculate CumInterest, ExInterest, expenses and the effective price. Effective price will include only the price of the stock, and it will not include the interest, because we will calculate the interest separately. And as we have made a separate interest column in the investment account, we don't need, we have in the effective price column will only calculate the price of the debentures. Alright, so let's have a look at the question. The purchase on 1st March 24,000, 5% debenture is the interest, and 90 cum-interest it was purchased. Alright, and the purchase was made on 1st September, and the interest is payable on 31st March and 31st September. Alright, so it's a very important calculation. You guys should understand this calculation, because it's a bit tricky. So here we can see that when you make a purchase on 1st September, just think that I made a purchase on 1st September. Alright, I made a purchase on 1st March. Alright, and then now you are the holder of say 10 debentures on 1st March, and you get the interest on 31st March. Alright, so you purchased on 1st March and you get the interest on 31st March, and the previous interest was received on 1st October. Alright, then see, when you get the interest amount, the company sees that you are the holder on this date, and he gives you the interest of the entire 6 months. Alright, but here is the catch. Effectively, for how many months have you held the debentures? It's 1 month. Alright, so when we purchased the debentures on 1st March, we purchase consideration will include the price plus the interest which has been accrued. Alright, means when you pay for the debenture, you pay for this 5 months interest also, and when you receive this 6 months, means effectively this you receive 6 months and you have already paid 5 months. Listen again, you have paid for 5 months and you receive 6 months, means effectively you are paying for only 1 month. Get it? I'll just explain it again, as this is really important. You purchase on 1st March, but the interest is paid on 31st March. So you are receiving the interest of 6 months, but while purchasing you have already paid the accrued interest of 5 months. So when you receive 6 months interest, as you have paid 5 month accrued interest, you have effectively received the interest of only 1 month, and that is the duration you have held the debentures. Alright, so it's a win-win situation for all, the seller and the purchaser. Alright, so let's solve this question. Here we can see that the purchase was made on 1st March of rupees 24,000, 5% debentures at Cum-Interest 90, and the interest was payable on 31st March and 30th September. Alright, so here first is a purchase on 1st March of face value 24,000. So the interest will be 24,000 into 5% into 5 by 12. This is 5 by 12 because you purchased on 1st March and the previous interest was paid on 30th September. So when you purchase the debentures, you are paying an accrued interest of entire October month, November, December, January and February. Alright, which is 5 months. Alright, so you need to pay an accrued interest of 5 months. So the 24,000 into 5% into 5 by 12. Alright, which amounts to 500. The cum-interest amount is directly given as 90, so it will be 24 as this is 240, as assuming 10 rupees is the face value, 100 is the face value, into 90, it's 21600. So this is the cum-interest amount. This is the interest. So ExInterest will be cum-interest minus interest, which will amount to 21100. Alright, cum-interest minus accrued interest is ExInterest, as ExInterest is the amount excluding interest. Fine. And here the expenses is expenses will be brokerage of 2% of CumInterest plus 20. Alright, 2% of CumInterest. CumInterest is 2160 into 2% plus 20, which amounts to 452. So the effective price will be, this ExInterest amount. We won't take the, the thing is that we won't take the CumInterest because we have already mentioned interest amount in the investment account separately. So the effective price is the amount excluding interest. So the effective price will be ExInterest amount minus expenses, means 21100 minus the effective price will be 21100 plus 452. Alright, which is 21552. As this is a purchase and this is the brokerage, as this is a brokerage purchase and its brokerage needs to be paid. So this is your X cost plus brokerage cost and expenses cost with effective prices this much. If this would be a sell entry, then expenses would have been deducted from the amount you have received. Alright, we'll come to that further. So now we can write the entry as 1st March, as on 1st March to bank, face value 24,000, investment is 1552, interest is 500. Alright, so this is the effective price of the investment which we have invested is 21552. 21552 is the amount which is invested. Alright, then now next we move to the question is that interest for the half year was received, interest on the half year was received on the due date, which means on 31st March by bank, what will be the interest value of 6 months? 6 months of interest value of your total holding will be 24,000 multiply 5% multiply 6 divided by 2. Okay, let's do this again. The interest amount will be 24,000 into 5% divided by 2. It's 600. Alright, 600 is the interest you have earned for 6 months. 600 is the interest you have earned for 6 months, as 24,000 is the total holding, 5% is the interest rate, and you have held it for, and the interest for the half yearly will be 5 divided by 2, which is 600. Alright, further we move to the next adjustment is that on 1st September 10,000 of the stock was sold at 92x interest less brokerage at 2%. Here we are selling the share investment, which means that we need to pay brokerage. So amount we are receiving, we will deduct brokerage after that. Alright, the sell on 1st September of rupees 10,000, 1st September. So the interest was paid on 31st March, and we sell the share in debentures on 1st September. Alright, which means we need to pay an accrued interest of April, May, June, July, August, which means 5 months. Alright, means 10,000 into 5% into 5 by 12, which is 208. Alright, and it is of 92 ExInterest, which means 92 into 100, 92,000 ExInterest. Alright, and the brokerage is of 2%, which means 9200 into 2%, which amounts to 184. Alright, so and the effective price will be ExInterest minus brokerage, because this is a sales entry, so we need to pay brokerage. So 9200 minus 184 is 9016. So now let's make the entry in our investment account, which will be on 1st September, is by bank. Face value will be 10,000. Investment, as we have calculated, is 9016, and the interest we have calculated as 208. Alright, calculated as 208. Right, so let's move ahead. Third is on 1st October, 8,000 stock was purchased at 91 ExInterest plus brokerage at 2% and charges 10. So we can do this really quick. A purchase on 1st October, 8,000. As this was purchased on 1st October and the interest is paid on 31st September, so there will be no accrued interest. Got it? Because the interest is paid on 31st September and the debentures are purchased on 1st October, there will be no accrued interest. Alright, no accrued interest. And the amount is paid on 91 ExInterest, which means 7280 as 80 into 91, which is 7280. And the interest is 2% off, and the interest is 2% of ExInterest, 2% of ExInterest, which means 2% of 7280 plus 10 rupees of stamp duty will amount to 156. So since this is a purchase entry, we need to add the brokerage and the stamp duty. So the amount is 7280 plus 156, which is 7436. So let's make an entry. On 1st October, to bank, face value of 8,000, investment of 7436, and since there is no accrued interest, we will not give any entry on interest. Alright, so let's move further. On 1st December, 8,000 stock was sold at 94 cum-interest less brokerage 22%, which means a sales entry of 1st December, 6,000 face value. So for 1st December, which means we have held the shares for 2 months, which is October and November. Alright, so 6,000 plus 5% into 2 by 12 equal to so the amount is rupees 50. Alright, this is 2 months because the interest was due on 31st September and we purchased the shares on 1st December, which means we need to pay an accrued interest of 2 months, that is of October and November. Alright, and here we have purchased, we have sold the shares on 94 cum-interest, which means 94 cum-interest, which means 60 into 94, 60 into 94, which is 5642, which is 5642, which is 5642, and when we deduct the X interest, it is 5590. We need to deduct the interest to find out X interest, and the brokerage is 2% on CumInterest, and the brokerage is 2% on CumInterest, so which is 113. 2% of CumInterest, 2% of CumInterest. So now when we deduct, since there is a sell entry, we need to deduct the brokerage from the X interest amount, which is 5590 minus 113, which amounts to 5477. Alright, so we can give an entry here. We can give an entry here of 1st December buy bank 6000, investment 5477, interest is 50. Alright, so since the accounts are closing on 31st December, we need to have an accrued interest, accrued adjustment for the 2 months, because as for 3 months, as the interest is received on 31st March, so we already have earned income interest of months October, November and December, which is 3 months, but we haven't received the amount, so it will be treated as accrued interest at the end of the financial year. Alright, so the accrued interest will amount to, we can calculate the interest accrued by taking the total number of amount we have and then calculating the interest. Right, so for that we need to first balance the amounts. So here we can see that the face value balance is 32,000. Investment total is 28988. So on the credit side, buy balance carried down on 31st December 16,000, and so the interest on 16,000 for October, November and December will be 199.99, which can be written as 200. So the accrued interest is 200. Now we can balance the accrued interest also by 1408, and on 31st December here it's to P&L, as we have made a profit on interest, that is of 280. This is the balancing figure. Now we need to calculate by a weighted average method. We can calculate the investment value. Alright, we can calculate the investment value. This is really simple. As you can see, the cost of purchase. The cost of purchase is 32,000. Alright, this is 32,000. And the amount invested till now is 28,000. Investment is 28,988. Alright, and we need to find the value of investment value of 16,000 when the face value is 16,000. Alright, so if the face value is 16,000, simply we can use unitary method and say that is investment value is 2828988 divided by 32,000 into 16,000, which is 14494. Alright, so investment equal to here we can see that the market value of the investment is written as 88.1/2%, which means that market value equal to 16,000 into 88.1/2%, which is 16,000 multiply 88.5% equal to 14. The market value is 16,000 multiply 88 by half is 14160. So the investment is market value or the cost of acquisition, whichever is lower, which is 14160. Alright, so in the end we can write it 1410, and the balancing figure will be transferred to the P&L account, which is 335. Alright, so let's recap. The first and most important thing is that we should always pay for what will always receive for whatever we have paid. Like if we are holding a share for 1 month, eventually we will be getting the interest of that debenture for only 1 month. Alright, and we should always remember there is accrued interest, and adjustment for that should be done. Alright, then brokerage is always calculated on the basis of purchase or sell. If we have purchased the shares, the brokerage will be paid, alright, which is added to the cost, and if we sell the shares, whatever amount we have received, the brokerage will be deducted from it. Alright, and the third, the valuation of the investment will be done by market value or the cost of investment, whichever is lower. Alright, so that's all for today. If you like the video, please like and share, and please subscribe because it helps me be motivated and make further videos. So that's all for today. Thank you.
Breathe in the air, the light that surrounds me. If we hold ourselves together, we'll go far. Created a space in my head, it was air.